answer. I'm gonna go ahead and make this video. This video I was gonna send anyway to you. These are the pairs that I'm looking at. So I'm just marking up. I don't care which zone is the strongest. You get what I'm saying? Uh, I'm just marking up my levels. So once I mark up my levels, as long as price is above, as long as we have a rejection candlestick, and as long as one of these time frames are in sync, the H2 is not, the H1 is not, but we can see the 30-minute is, I'm taking the trade. I'm making it, bro. I'm making it that simple. I got this EMA on here. At the end of the day, the EMA don't even matter. I don't even know why I got it on there because it doesn't dictate whether or not I take my trade. Does it make it possibly a stronger confluence? Yeah, but at the end of the day, it's not the overall reasoning why I'm taking this trade. So Euro Chef is one. Euro USD. We identify which direction we're in. We're clearly in an uptrend. And you've noticed only got two zones marked, right? So I can mark a third just in case we want to go. So it looks like it's right in here somewhere. We can mark a third. We got our break. We got our retest. We're rejecting off of this zone, and we got a rejection candlestick. The reason why we have to have a rejection candlestick is because it tells you price wants to slow down. It tells you that we are still respecting this zone, right? So like over here, you can see right here, the spot right here, see how price just broke through? Now, if we would have just placed a buy limit at this zone, then we probably would have got stopped out. But we allowed price to come back, and then it gives us a potential entry, if we're in that direction, right? But with all that being said, let me do this. Notice how we got a pullback right here. We got a break. Once price closed, like if I was in this trade, like let's say we got in over here, once price came and closed below, I'm literally getting out of this trade. Like I'm not messing with it. And then it does it again. I'm not messing with it. And if it does break below, it has to do one or two things. It has to close back above, or it has to go to this next zone in order for me to get another entry. That's what I'm looking for. And this is where essentially, you will take some losses. I mean, the losses are inevitable. We'll take some losses along this. But can we control our capital, right? Does it follow our plan? That is the key. So it makes sure, you may be aiming for a 1 to 2 on the trade, and that 1 to 2 is if price just goes down and hit your stop loss, or goes up and hit your take profit. But if we're able to, like, the trade was a 1 to 2, but it closed below price, we were able to take out. It turns that trade into it really would have been a 1 to 3. You get what I'm saying? Because we closed profits. So the next one that goes and hits its 1 to 2, based off those two trades, makes our RR greater over time. So definitely protect the capital. So Euro Chef, Euro USD, NZD CAD. Look how clean this is, bro. Like these are the trades that I'm now looking to take. This is why I'm not worried about the daily and the weekly. I'm just gonna follow the H4 structure. Get our daily move. Sometimes it takes two. Not saying that we're not swing traders anymore, because I'll hold it as long as I'll hold the trade for weeks as long as price is still showing me that it wants to go in the direction I want it to go in, right? But what happens is this allows us to find setups on a daily basis, if we need them, right? But we got a rejection candlestick. We just waiting for price to come back down in here. Literally, you can see there's a time frame that aligns. There's a time frame that aligns. The H1 doesn't align. The H2 doesn't align. But as long as these other two stay in alignment, then we're good. So price can literally come down, touch, buy limit, and then we can look to take it to the upside. Here's another one. This one is not necessarily my favorite just because it's halfway up to the next zone. And, you know, if you notice, we're at the top of you can tell a big resistance zone. But at the end of the day, we're going to trade what we see. We're not going to. What I'm done doing is we're at a daily zone, and and this is a major level, and and not take trades based off me trying to control, bro, trying to play God. I'm trading what I see. This mug look like a buy, we can take it if we want, right? GBP, JPY is another one. We just got a rejection candlestick. We're now waiting on price to come to this area as long as the other 4 time frames are aligned. This is the one I was talking about, USD JPY. This is a trade that we're looking to take, but we have to wait on an alignment with the direction that we're going in. So we're in a 2-hour uptrend. We are in a 1-hour uptrend. We're in a 30-minute uptrend, and we're in a 15-minute uptrend. So the time frame that's going to switch first, obviously, it's going to be your lower time frames. So you're going to get a 15-minute shift of structure and a 30-minute shift of structure before you get a 1-hour and 2-hour. And we're going to look for a break, another retest on the lower time frame, and we're going to be looking to sell this. And if it doesn't happen, we don't take a trade. So those are the ones I'm looking at today. So now what will happen is I'll try to send these out on a daily basis. That way, and I'm gonna put this in the group too. We send this out on a daily basis on which pairs I'm looking to buy or sell. But this right here just cleans everything up. I don't have a daily level. I don't have a weekly level. We're trading what we see.